AI just analyzed 50,000 stocks in under 3 seconds and found opportunities that human investors missed for years. If you're not using AI in your investing strategy, you're already behind. Welcome to Next Gen Money Trends, where we help you navigate the evolving world of personal finance and investment tech. Artificial intelligence isn't just changing how we work or communicate. It's completely transforming how money gets invested, who has access to sophisticated strategies, and what's possible for everyday investors like you and me. Here's the thing. AI investing used to be exclusive to Wall Street hedge funds with billion-dollar budgets. They'd hire teams of PhD mathematicians and spend millions on supercomputers just to get a tiny edge in the market. But today, that same technology is available in apps on your phone, often for free. AI can now analyze market patterns, predict trends, and manage portfolios in ways that would have been impossible just 5 years ago. Today, we're breaking down exactly how AI is revolutionizing investing, and more importantly, how you can use these tools to potentially improve your own investment returns. Let's dive in. Number 1, AI is democratizing advanced investment strategies. The first way AI is changing investing is by putting Wall Street-level strategies in the hands of everyday investors. Traditionally, sophisticated investment techniques like algorithmic trading, risk management, and portfolio optimization were only available to institutional investors. You needed millions of dollars and a team of analysts to even consider these strategies. Now, AI-powered platforms like Betterment, Wealthfront, and M1 Finance use the same mathematical models that hedge funds pay millions for. These robo-advisors automatically rebalance your portfolio, harvest tax losses, and optimize your asset allocation based on your goals and risk tolerance. Here's what's incredible. These services typically charge 0.25% annually, while a traditional financial advisor might charge 1% or more for less sophisticated management. That difference could save you tens of thousands. But it goes beyond robo-advisors. Apps like Acorns use AI to analyze your spending patterns and automatically invest your spare change. The AI learns your habits and adjusts investment timing to maximize your contributions without impacting your cash flow. The result? Advanced investment strategies that were once exclusive to the wealthy are now accessible to anyone with a smartphone and $5 to invest. Number 2. Predictive analytics are getting incredibly accurate. AI's ability to predict market movements is becoming remarkably sophisticated, and it's changing how investment decisions get made. Modern AI systems can process vast amounts of data simultaneously. News articles, social media sentiment, economic indicators, earnings reports, satellite imagery, and even weather patterns. They're finding connections that human analysts would never spot. For example, AI can analyze satellite images of retail parking lots to predict a company's quarterly earnings before they're officially announced. It can monitor social media sentiment around specific stocks and identify buying or selling pressure days before it shows up in price movements. Some AI systems are even analyzing the tone and word choice in CEO earnings calls to predict future stock performance. Research shows that certain linguistic patterns can indicate whether management is confident or concerned about future prospects. You don't need to become a data scientist to benefit from this. Many investment platforms are integrating these insights directly into their recommendations. Apps like Trade Ideas and Stock Rover use AI to screen thousands of stocks and identify potential opportunities based on complex pattern recognition. Instead of manually researching individual companies, the AI presents you with a curated list of stocks that meet specific criteria. The key is understanding that these are tools to inform your decisions, not replace your judgment entirely. Number 3. Personalized portfolio management is becoming the norm. AI is making portfolio management incredibly personalized in ways that were impossible before. Traditional investing advice was often one-size-fits-all, invest in index funds, and call it a day. But AI can create customized investment strategies based on your specific situation, goals, timeline, and even personality. For instance, AI can analyze your spending patterns, income stability, and financial goals to determine the optimal savings rate and asset allocation. It can adjust your portfolio automatically as your life circumstances change, getting more conservative as you approach retirement or becoming more aggressive when you get a raise. Some platforms are taking this even further. Schwab's Intelligent Portfolios and Vanguard's Digital Advisor use AI to consider factors like your other investments, tax situation, and even behavioral biases when making recommendations. The AI can also help with behavioral coaching. It can detect when you're likely to make emotional decisions, like selling during market downturns, and provide personalized guidance to keep you on track. What's really exciting is fractional investing combined with AI optimization. Instead of being limited to buying whole shares of expensive stocks, AI can allocate your money across hundreds of investments in precise percentages to optimize your returns and minimize risk. Number 4, AI is creating entirely new investment opportunities. Here's where things get really interesting. AI isn't just improving traditional investing, it's creating completely new investment categories. AI-powered hedge funds are generating returns that seem almost impossible. Renaissance Technologies, one of the most successful AI-driven funds, has averaged over 30% annual returns for decades by using machine learning to identify incredibly subtle market patterns. But you don't need hedge fund access to benefit. AI is enabling new types of ETFs and mutual funds that use algorithmic strategies. These smart beta funds use AI to weight holdings based on factors like momentum, quality, and volatility, rather than just market capitalization. There are also AI-focused investment themes emerging. You can now invest in companies developing AI technology, from chip manufacturers to software companies. ETFs like BOTS, Robo, and ARKQ give you exposure to the AI revolution itself. Even more fascinating, some platforms are using AI to create dynamic investment strategies that adapt in real time. Instead of buying and holding, these systems continuously adjust based on market conditions, economic data, and global events. We're also seeing the emergence of AI-powered alternative investments. Platforms are using machine learning to identify opportunities in real estate, commodities, and even art collections that were previously impossible to analyze effectively. The bottom line, AI is creating investment opportunities that didn't exist 5 years ago, and we're still in the early stages of this transformation. Number 5, cost reduction is making investing more accessible. AI is dramatically reducing the costs of investing, which means more money stays in your pocket to compound over time. Traditional investment management involved teams of analysts, expensive research, and high overhead costs. These expenses were passed on to investors through high fees and minimum account requirements. AI eliminates much of this overhead. Automated systems can manage thousands of accounts simultaneously without the need for large human teams. This efficiency allows platforms to offer services at a fraction of traditional costs. Many robo-advisors charge 0.25% annually with no minimum balance requirements. Compare that to traditional financial advisors who typically charge 1% annually and often require $100,000 minimums. But the cost savings go beyond management fees. AI-powered tax loss harvesting can save you hundreds or thousands in taxes annually. Automated rebalancing eliminates transaction costs that would accumulate if done manually. Some platforms are even offering zero-fee trading powered by AI optimization, making it possible to build diversified portfolios without worrying about transaction costs eating into your returns. Number 6, risk management is becoming more sophisticated. Perhaps most importantly, AI is revolutionizing how investment risk gets managed, potentially protecting your money better than ever before. Traditional risk management relied on historical data and human judgment, but markets change, and past performance doesn't always predict future risks. AI can identify emerging risk patterns that humans might miss. Modern AI systems continuously monitor thousands of risk factors simultaneously, from geopolitical events to currency fluctuations to sector rotations. They can adjust portfolio allocations in real time to manage downside risk while maintaining upside potential. Some AI systems use stress testing to simulate how your portfolio would perform under various market scenarios, from mild corrections to major crashes. This helps ensure your investment strategy can weather different market conditions. AI is also getting better at detecting market anomalies and potential bubbles before they burst. By analyzing trading patterns, sentiment data, and fundamental metrics, AI can identify when certain investments might be overvalued or due for a correction. For individual investors, this means AI-powered platforms can potentially help you avoid major losses while still participating in market gains. The systems can automatically reduce risk when volatility increases and become more aggressive when opportunities arise. Number 7, the future is arriving faster than expected. The pace of AI development in investing is accelerating, and what's coming next will make today's tools look primitive. We're already seeing the emergence of AI that can understand and analyze unstructured data, like news articles, social media posts, and even satellite imagery to make investment decisions. Natural language processing is advancing to the point where AI can read and understand complex financial documents, earnings calls, and regulatory filings in seconds rather than hours. This will level the playing field between individual investors and large institutions. We're also moving toward AI that can explain its reasoning in plain English, making these powerful tools more accessible to everyday investors. Instead of black box algorithms, you'll be able to understand why the AI is making specific recommendations. The integration with other technologies is accelerating too. Blockchain, quantum computing, and advanced data analytics are combining with AI to create investment capabilities we can barely imagine today. Here's the bottom line. AI is not just changing investing, it's democratizing it. Tools and strategies that were once exclusive to Wall Street are now available to anyone with a smartphone. But remember, AI is a tool, not a magic solution. The most successful investors will be those who understand how to use AI to enhance their decision-making, not replace it entirely. You still need to understand basic investing principles, have clear financial goals, and maintain a long-term perspective. The good news, you don't need to become a tech expert to benefit from AI investing. Start with simple robo-advisors or AI-powered portfolio management tools. As you get comfortable with the technology, you can explore more advanced options. If this video opened your eyes to how AI is transforming investing, hit the like button. It helps us reach more people who need to understand these game-changing trends. And definitely subscribe with notifications on because we're constantly covering the latest fintech innovations and investment strategies that can give you an edge in building wealth. Until next time, keep building that next-gen wealth.